Monday was a bank holiday, UK and Japan still, so relatively quiet trade, but we have seen some decent price action already in the week, with stocks gapping lower over the weekend on the idea that trade talks have started to break down, albeit some positive comments did happen to the back end of yesterday's session. However, we are under a bit of pressure this afternoon, in the first cash open, or the second cash open I should say, of the week will be a pretty interesting one to keep an eye on. Also got some pretty good data points or calendar highlights as well to keep an eye on, with PM May and Corbyn meeting later, ECB's Draghi Thursday, Powell, you've got Powell speaking on Thursday I should say, and then some US numbers and UK numbers out on Friday, which will be worth keeping an eye on, with the UK GDP and CPI inflation numbers on the Friday there as well. Just having a quick look over the S&P 500, talking about that gap lower. You can see that wasn't filled, and neither was the Nasdaq or the Dow Jones. So
just under a minute now.
It's worth keeping an eye on how this trend line acts around the pivot, which is also that low. You get a breakdown of that, and then 29.0405. And this market, the sentiment could continue to the downside, and people will start to think, well, maybe we have seen the all-time high sort of made for the next sort of medium term. To the upside, if we have a positive cash open and break through the high of the day, you can see just how important that level has been, which was an area of support, turn resistance. If we do get back above that, you can imagine this whole story of the negative sentiment of the trade wars potentially being delayed and Trump raising tariffs on Friday have been put to bed. Key level to the downside should we get there, and I think this will attract plenty of people for a more medium term position. The high that we had back on the 22nd of March was also some good support, or thereabouts, on the 8th of October last year, before that sell-off of global equities. 28.65, the level I'd be focusing on if we were to come back lower. On that low of yesterday, you can see we had some quite good support earlier in the month, and the back end of previous month I should say, going back to the 12th, so acting quite well, but keeping an eye on the pivot and the low of the day for a gauge of sentiment to the downside and to the upside. 29.30. Another market where trend line you want to be aware of here is gold, and it held quite well at the back end of last week. You've also got the 200-day moving average at this price point, and also the 50% fib from the low of last year to the high of this year. To the upside, 12.87 will be an area to keep an eye on. If we look more intraday, you can see if we were to get up towards that, you're also going to have a trend line from the high of the 26th to the 1st. And also, well, if it was to happen today, you'd have the high of yesterday and the R1. So probably best to wait for it to break out the range before looking to get too involved. 12.81 to the downside, 85 to the upside on the futures. Other key levels to be aware of, more medium term here for the euro, but what was the low back on the 7th of March and the 2nd of April. If we were to get back above that, you might then start to have more faith in that this market could start to recover. However, overall bias I think still has to be to the downside, and as long as that's protected, the sellers will be in control. The pound, which broke quite a key trend line last week, as long as that remains, I'd say, above 131, as in where it closes the day, I think we'll remain bullish from that break. But if we were to get a breakdown of that and come back down to 130.41, then you'd expect to see things start to get interesting again, just how many times it's respected that level. But I hope you all have a good trading day and week ahead. Any questions as usual, please do let me know.